Many of us believe that while the Companies Act will achieve some noble objectives for corporate India, there are many hardships along the way for all stakeholders. My Diwali wish is that we achieve the higher level of governance with the Companies Act, but at the same time reduce the hardship in its implementation. I would like to wish all the viewers of the firm a very happy Diwali and a prosperous year ahead.
The firm has been holding up a lot of issues in the corporate sector against bright light. I wish they continue to do so for many more Diwalis to come. Wish you all a very happy Diwali and a prosperous New Year.
We've had a very eventful period since last Diwali. The economy has been through challenging times, rupee has been volatile, there have been regulatory headwinds, and more importantly, we've had a new Companies Act which has impacted the lives of all accounting professionals. My best wishes to you for a very happy Diwali, and I sincerely hope that the accounting profession will continue to play a stellar role in the period ahead.
My wish for this Diwali is India gets the act of drafting new acts right. Also wish the firm a very happy Diwali, and may they continue to spread the light of knowledge in all viewers' homes.
I wish India well for the year ahead, and I wish India becomes more competitive and the competitiveness report which has been chaired by Mr. Damodaran is implemented. I hope this is a great year for Indian investors and foreign investors, and SEBI makes it easy through the proposed FPI regulations to make it easy for foreign investors to invest in India. Let there be more capital, let there be more returns, and let there be a more productive year. I'd like to wish all your viewers a happy Diwali and good profit.
This Diwali, I wish there would be more M&A deals from an India perspective. We've dropped down last year, but I hope this Diwali brings in a big change, and I hope to see more deals. That's what we are all wanting to see, and India grow. I also wish all the viewers of CNBC, the firm, a very happy Diwali and a prosperous New Year.
This has been a very stressful year for the taxpayers. So my wish for the Diwali is that it should be a stress-free environment for the tax fraternity. Wish all the viewers a very happy Diwali.
Hello and happy Diwali to all our viewers. Do I have a wish for Diwali? Yes. I hope the Companies Act gets its act together. We have 30 years of uninterrupted growth. Happy Diwali, everybody.
Hello and welcome to the firm. A very happy Diwali to all of you from the entire team here. On the show this week, the 3 things SEBI needs to do to get REITs right, and why WWE's presence on the WWW was not enough for it to win a trademark and copyright infringement case in India. About a month ago, this show discussed the need for real estate investment trusts or REITs in India and what the architecture of a REIT regime should look like. Soon thereafter, SEBI issued draft guidelines. Now, the draft framework is broadly in line with industry expectations, but there are some niggling concerns. Paiswani Upadhyay lists the top 3 changes that industry would like to see before these draft regulations are finalized.
India is one step closer to becoming a part of the $205 billion REIT market in the Asia-Pacific region. Recognizing REITs as an important asset class for industry and investors, SEBI has now proposed draft guidelines for REITs. The chosen structure is a trust under the Indian Trusts Act. The regulator has laid down specific eligibility criteria and responsibilities for the parties involved: the sponsor, the trustee, the manager, and the principal valuer. The sponsor sets up the REIT and is required to hold at least 25% stake for the first 3 years after listing, and thereafter a minimum 15% for the life of the REIT. A trustee, who is independent of the sponsor, holds the REIT's assets in a trust and appoints a manager. The manager is responsible for the day-to-day affairs of the REIT and has to appoint the principal valuer, who is tasked with the job of valuing the assets in a true and fair manner. But a trustee-related requirement in the draft guidelines has experts worried. The trustee has to ensure that the REIT's assets have a marketable title and material contracts entered into by the REIT are legal and enforceable. SEBI places a similar requirement for mutual fund trustees who have the responsibility to ensure that a scheme's objectives are met. While the MF regulations permit associate entities to act as trustees, for REITs, SEBI has proposed an independent trustee. That implies an associate of the sponsor, manager or principal valuer cannot act as a trustee.
This to me is a very big burden which the trustee has to take, primarily because of the fact that the land title in India has always been a big issue. And ideally this should be the responsibility of the sponsor, because on one hand the regulations say that the trustee needs to be independent of the sponsor, and on the other hand the trustee has to take on the obligation on the title of the property. So that's going to be one point which SEBI needs to consider to change the obligation from the trustee to the sponsor. Second point, as you mentioned, internationally there are title insurance available, and it is much easier to certify the title of the property as compared to what we have in India, where we don't have digitized land records, we don't have title insurance companies certifying the title of the properties. So I think this is one point which will have to be considered by SEBI before finalizing the regulations for the REIT regulations to take off.
REITs typically hold real estate assets such as fully built properties. Rental income from them is in turn distributed to REIT investors as dividend. SEBI has proposed that funds to buy those real estate assets can only be raised via an IPO or a follow-on public offer. Experts say this can get very limiting, especially in tough markets.
Unless flexibility is provided to do a pref allotment to, let's say, a single unit holder who is willing to put in millions of dollars in the REIT to acquire the shares, and obviously all the approval requirements should be there, which we also have for listed companies to have 75% of shareholders by values approval. But I think that is one thing which should be permitted for REITs also. And second, rights issue, which is a common way of raising funds for the companies, where all the shareholders can participate and put in funds in the company. I think a similar concept should also be there for REITs. Especially because there is also an obligation which is cast on the sponsor, that the sponsor cannot be diluted below 15% of the holding in the REIT throughout the life of the REIT. Now if sponsor is not allowed to participate in the fundraising, how will the sponsor be able to ensure that the sponsor is not diluted below 15%, which is where the pref allotment and the rights issue route would be important.
I think like a public company, and where the principle of preemptive rights for existing unit holders. So one is where I do a follow-on offer. It should not lead to a further dilution of the interest of my existing unit holders at a price which is not, at least should be equal to the fair value. So today the regulations are silent on the pricing norms, which should be applicable to follow-on offering, and whether it should be the NAV only or a price flexibility of anything above NAV should be allowed. So it needs to be clarified over there.
The third important concern is regarding the lack of clarity on transfer of assets. In the draft regulations, SEBI has proposed listing requirements that cover minimum asset size of the REIT, offer size, minimum subscription amount and public float. But the draft regulations do not make it clear whether the assets are required to be transferred pre or post-listing. Experts say ideally the transfer should be allowed post-listing. Pre-listing transfers would be difficult to unwind.
What might happen is, if that is made mandatory, then the issue which might come up is that the sponsor would have already incurred the stamp duty cost and the tax cost for transfer of the property to the REIT. And on the other hand, if for any reason the listing is not successful or minimum subscription amount is not received by the REIT, then they will have to unwind the entire structure, where REIT will again have to transfer the property back to the sponsor, which will again entail a second layer of stamp duty and the tax cost. So that's something which needs to be clearly specified, that SEBI would be comfortable even if the REIT gets REIT properties transferred to the REIT after listing.
Most markets globally do allow REITs to go out and raise public money on the basis of an underlying binding contract from the sponsor to transfer the asset. So this at least mitigates the risk in the event where the REIT is unable to raise a public offer. So I think somewhere the regulations, though silent, I think will need to enable this mechanism to be implemented to that extent. Further, I think for follow-on contributions, again, I think it would always be, as an ongoing operating REIT, if I am looking at acquiring an asset, again a precondition of the asset being contributed into a REIT before I do a follow-on offer will have the same challenge.
Market participants are hopeful that SEBI will address most of these concerns in its final framework. But what's worrying them lies outside of these draft regulations, and that's the clarity on the tax front. Currently, there is no express provision for taxation of REITs, and so they are likely to be taxed as a business trust at the rate of 33.99%. Experts say unless a tax pass-through status is given to REITs, the idea may not take off. In Mumbai, Paiswani Upadhyay.
Well, like Paiswani said, the tax treatment on this one will make or break REITs in India. On that note, let's take a quick break on the firm. Coming up, WWE's presence on the WWW was not enough for it to win a trademark and copyright infringement case in India.